Hello everyone, welcome to In Solidum Lawyers on YouTube. Today we have a special topic on our agenda, Decentralized Finance or DeFi and its legal and regulatory environment in Ecuador. Let's get started. DeFi, short for Decentralized Finance, represents an innovative and disruptive wave in the financial world propelled by blockchain technology. But what exactly does it mean? Well, in simple terms, DeFi refers to financial services that no longer rely on traditional institutions such as banks or governments for their operation. Instead, these financial operations are carried out through decentralized networks. Think of it as a movement towards a more open and accessible economy that is less dependent on centralized institutions and more empowered by technology and people. But how does DeFi relate to the often heard term fintech? Well, fintech, which is an acronym for financial technology, refers to any innovation in the financial sector that involves the application of technology to improve or streamline financial services and processes. Therefore, DeFi is actually a subset of fintech. It is the part of the fintech ecosystem that is specifically rooted in blockchain technology. So, to sum up, we can say that DeFi is that revolutionary branch of fintech that uses blockchain technology to build open and decentralized financial services. This exciting development has tremendous potential to redefine the way we interact with money and financial services. And it is an area that we at In Solidum Lawyers are particularly passionate about helping our clients navigate with confidence and security. Talking about Ecuador's response to the DeFi trend is to talk about a true push towards digitalization and financial inclusion. Ecuador has taken firm and decisive steps in this direction, proving to be proactive and receptive to innovation in the fintech and DeFi sector. In December 2022, Ecuador took a significant leap with the approval of the Fintech Act, a set of normative reforms aimed at creating an enabling framework for fintech companies in the country. This legal framework aims to address various fintech activities, such as technological infrastructures to channel payment methods, technological financial services, specialized companies for electronic deposits and payments, technological stock market services, and technological insurance services. A fundamental element of this act is the regulatory sandbox, a regulatory testing environment for new business models focused on technological, financial, stock market, and insurance services. This provides a safe and supervised space for companies to test and develop their services, which foster innovation while keeping a close eye on consumer protection and financial system stability. If you are or plan to be a fintech entrepreneur in Ecuador, it is essential that you familiarize yourself with this regulatory framework. Your company will have to be incorporated before the Superintendency of Companies, Securities and Insurance, and the corporate purpose of your company must be exclusively that of fintech activities. Then, depending on the nature of your fintech activity, you will need to obtain a temporary authorization from the corresponding financial authority. It's really exciting to see how Ecuador is moving towards a more digital and inclusive future. And at In Solidum Lawyers, our mission is to help players in this space navigate this legal framework, ensuring that they can innovate with confidence but also with responsibility and respect for the law. Ecuador has taken a significant step in the recognition and regulation of fintech and DeFi companies with approval of the Fintech Act. Through this law, a licensing and supervision framework has been established that applies to both fintech and DeFi companies in the country. To operate in Ecuador, all companies performing fintech activities, including DeFi, must be registered with the Superintendency of Companies, Securities and Insurance. It is imperative that the corporate purpose of the company is exclusively that of fintech activities. Moreover, they will need to obtain temporary authorization from the corresponding financial authority. For example, if your fintech activity is related to the payment system, you will have to go before the central bank to obtain such authorization. On the other hand, if your company is developing fintech activities that are not related to the payment system, you will have to go before the Superintendency of Banks or the Superintendency of Popular and Solidarity Economy as applicable. For companies related to technological insurance services and technological auxiliary service of the securities market, they will have to go before the Superintendency of Companies, Securities and Insurance. The FinTech law has also established the creation of a regulatory sandbox, a regulatory testing environment for new businesses models focused on financial securities market and insurance technological services. Companies that fall under this regime will be able to develop their services under constant supervision and control. Therefore, the law not only establishes the framework for DeFi companies to operate in the country, but also provides a path for startups and innovators looking to test and develop new financial solutions in a safe and regulated environment. Decentralized finance, or DeFi, has a number of benefits and advantages that are truly revolutionary for the financial world. The first benefit that stands out is accessibility. DeFi, by operating on decentralized networks and being based on blockchain technology, can reach populations that our traditional financial services cannot or have not been able to reach. This can mean the financial inclusion of people in rural areas or in economic situations who would normally not have access to financial services. In addition, DeFi can offer transparency like no other form of finance. Transactions and smart contracts on the blockchain network are visible to everyone on the network, reducing the risk of frauds and financial misconduct. This transparency is a great advantage in a world where trust in financial institutions can be low. Efficiency is another key benefit of DeFi. By eliminating intermediaries, transactions and financial agreements can be carried out much faster and more efficiently. Furthermore, by reducing the need for intermediaries and the respective fees, costs can also be significantly lower in DeFi than in traditional financial systems. Finally, DeFi has the potential to foster financial innovation. By operating in a more open and flexible space, DeFi companies can experiment and create new types of financial products and services, leading to a more diverse and dynamic financial landscape. These advantages have immense potential, especially in a country like Ecuador that is actively embracing fintech and DeFi innovations through regulations like the recent Fintech Act. Despite the advantages and benefits that decentralized finance or DeFi can offer, it's essential to recognize that they also come with their own risks. One of the main risks in DeFi is market volatility. Assets on DeFi platforms are usually cryptocurrencies, which are notoriously volatile. This can lead to significant fluctuations in value and the possibility of large losses. Another relevant risk is security. Although blockchain technology is inherently secure, DeFi platforms can be vulnerable to hacks. In addition, since DeFi removes intermediaries, the responsibility for security largely falls on the individual user. This can be particularly problematic if users are not aware of best security practices. Associated with security, there are scam risks. As in any financial sphere, scams can do and occur in DeFi. Given the novel and complex nature of DeFi, it can be difficult for users to distinguish between a legitimate investment and a scam. Lastly, legal and regulatory risks are a significant consideration. The regulation of DeFi is still in its early stages in most countries, and there is great uncertainty about how laws and regulations will evolve in the future. This can have implications for DeFi companies and users who may face unexpected legal consequences. In this sense, it is important to highlight that in Ecuador, the Fintech Act has been developed to try to mitigate these risks, establishing a regulatory framework that seeks to protect the consumer and ensure the stability of the financial system without inhibiting innovation. Decentralized finance, or DeFi, is undoubtedly one of the most innovative and dynamic segments of the current fintech landscape. Its potential to democratize access to financial services and revolutionize the way we handle our finances is tremendously exciting. However, the future of DeFi is also full of uncertainties. In many ways, we are in uncharted territory. As these technologies continue to develop and evolve, new challenges and obstacles may emerge. One of the most significant factors that will influence the future of DeFi is regulation. As the DeFi sector gains attention and grows, it is reasonable to expect increased scrutiny from regulators, and with that will inevitably come new regulations. These regulations could shape the development of DeFi in many ways, either encouraging innovation and its adoption or imposing restrictions and obstacles. For instance, in Ecuador, the recent FinTech Act shows that the government is willing to adopt a proactive and receptive stance towards FinTech and DeFi innovation. Through its legal framework, it aims to foster innovation in the FinTech space, ensure consumer protection, and maintain the stability of the financial system. However, much remains to be seen about how this act will be implemented and enforced in practice, and exactly how it will affect the DeFi sector in the country. This is where our role as lawyers and subject matter experts becomes crucial, as our job is to help our clients understand and navigate this ever-changing landscape, ensuring they can make the most of the opportunities DeFi has to offer while minimizing associated risks. In summary, the future of DeFi is exciting and promising, but also uncertain and complex. Undoubtedly, it will be fascinating to see how this space develops over the coming years. Decentralized finance, or DeFi, represents a new way of thinking about and managing finance. By leveraging blockchain technology to eliminate intermediaries, DeFi has the potential to completely redefine how financial services function. One of the most significant impacts of DeFi could be the democratization of access to financial services. In theory, with DeFi, anyone with an internet connection could access a full range of financial services, from loans and savings to insurance and stock trading. This could have a particularly profound impact on underbanked communities and regions where access to traditional financial services may be limited or non-existent. DeFi can also increase the efficiency of financial services. By eliminating the need for intermediaries, transactions can be processed more quickly and cheaply, which could result in lower costs for consumers. However, there are also significant challenges associated with DeFi. One of the most important is regulation. As I mentioned earlier, as DeFi grows and gains attention, we are likely to see increased scrutiny from regulators, and this could affect how and to what extent DeFi can change traditional financial services. In addition, there are also challenges related to security. Although blockchain technology is inherently secure, there is still the risk of hacks and scams in the DeFi space. This presents a significant challenge for traditional financial institutions that are considering incorporating or interacting with DeFi technologies. Ultimately, traditional financial service providers will need to adapt to this new reality. Some may choose to collaborate with DeFi platforms, leveraging their technologies to improve their own services. Others may see DeFi as a competitor and look for ways to differentiate themselves. In summary, DeFi has the potential to radically transform financial services, but it also poses significant challenges. Traditional financial service providers will need to find ways to adapt to this new landscape and seize the opportunities it offers. Decentralized finance, or DeFi, operating on open source, distributed, and peer-to-peer technology, presents significant challenges in terms of regulation and legality. One of the main challenges is regulatory ambiguity. Due to its decentralized and global nature, it's unclear what jurisdictions or regulations apply to DeFi transactions, or even how they should be applied. In Ecuador, for example, the FinTech Act provides a framework for FinTech companies, including DeFi companies. However, the regulations are still nascent and subject to change. Another challenge is consumer protection. With traditional financial services, consumers have certain rights and protections, such as the ability to claim against an intermediary in case of a problem. In DeFi, where there are no intermediaries, dispute resolutions and consumer protection can be more complicated. In addition, there is a challenge of illicit activity. The anonymity provided by some DeFi platforms can be exploited for money laundering, tax evasion, or other illegal activities. Although most DeFi users are legitimate, the possibility for abuse is a real concern. Lastly, there is the challenge of operational and cybersecurity risk. DeFi relies on smart contracts, which are automated programs that execute transactions when certain criteria are met. If there is an error in the smart contract, it could be exploited to steal funds or cause other damage. In summary, while DeFi offers many exciting possibilities, it also poses significant regulatory and legal challenges. Lawmakers and regulators will need to work together to ensure that this innovation can be leveraged safely and effectively. DeFi companies can adopt various strategies to comply with regulations and minimize legal risks. Even though this is a new and complex regulatory field, there are some strategies that can be useful. First, DeFi companies can work to comply with existing standards. In Ecuador, with the recent enactment of the FinTech Act, companies that provide digital financial services, including DeFi, are subject to the supervision of different financial authorities depending on their type of activity. This may involve obtaining appropriate licenses, meeting capital and risk requirements, and operating under a supervised regulatory sandbox regime. Secondly, it's essential to implement robust Know Your Customer and anti-money laundering procedures. Even though the nature of DeFi may make this challenging, there are technological solutions that can facilitate the identification and verification of users. Thirdly, DeFi companies should be transparent in their operations. This can include publishing security audits, disclosing risks, and clearly communicating with users about how their platform works. Additionally, it's crucial that DeFi companies commit to consumer protection. This can involve setting up mechanisms for dispute resolution, protecting user data, and educating users about DeFi risks. Finally, DeFi companies need to stay up to date with changes in law and regulations. This may require hiring expert legal counsel and maintaining an open dialogue with regulators and policymakers. In summary, although DeFi is a complex field from a regulatory standpoint, there are ways that companies can work to comply with regulations and protect their users. Lawyers play a key role in the DeFi space, and their importance is only going to grow as this industry continues to evolve. DeFi is an emerging technology with complex legal and regulatory implications. As governments and regulators grapple to understand and effectively regulate this space, the role of lawyers becomes increasingly crucial. One of the main roles of lawyers in this space is providing legal and compliance advice. This can include advising companies on how to comply with relevant laws and regulations, including the FinTech Act in Ecuador. It can also involve helping companies understand and mitigate the legal risks associated with DeFi, such as litigation and liability risks. Lawyers can also represent companies and individuals in litigation related to DeFi. As DeFi is a new and complex area of the law, these litigations can present unique challenges. Additionally, lawyers can play a role in shaping laws and regulations in the DeFi space. This can involve working with lawmakers and regulators to help them understand DeFi and develop regulations that promote innovation while protecting consumers and the integrity of the financial system. And with that, we've reached the end of our analysis on DeFi and its legal context in Ecuador. As we've seen, it's an area full of opportunities, but also significant challenges, especially in terms of regulation and compliance. At In Solidum Lawyers, we understand these challenges and are prepared to help you navigate this exciting and complicated new landscape. It's important to keep up with the latest trends and developments in this space, given its constant change and evolution. That's why we invite you to subscribe to our channel to stay informed about all the latest in the legal and tech fields. Until next time.